Good morning. 8:50, October 30th. Just woke up, washed my face, had a little prayer on the computer, then have a coffee. Um, yeah, markets, nobody knows when a market bubble will pop or when. But you know what you can predict? You can predict a pullback. That you can predict, right? Let's have a look at. It's earnings season, by the way. It's easy to predict pullbacks in earnings seasons. So this push right here is strong. But after you see a rally in a market, you have to say, oh, there could be a pullback at some point. Anyways, Federal Reserve cut rates yesterday. The market ended up selling off. Yeah, December isn't confirmed because he wants to see the jobs reports again. That's all right, but you're cutting rates, you're bringing it down. That's good. That gives a relief. It takes few months to feel it, but still gives a relief. Yeah, there's some stocks here that sold off heavy. Look at this. GPUS. What's that? So stupid. Anyways, it's not falling because of this meeting. The Yahoo says it's falling because of this meeting. It's not. Microsoft beats on earnings as cloud shines but stock tumbles. It's earnings season. Investors have been betting on the stock market for the last couple of months. Betting that it's going to come out. These stocks are going to come out smashing. And then suddenly they come out and the results are kind of sluggish. It's not wow, right? It's good, but it's not wow. What do you think happens to the market? It needs to correct, right? Imagine you buy something and you're excited and then you open it and it turns out meh. Well, you're not going to get excited about it, right? That's the same with the stock market. 49 billion cloud. So that's a good, suppressing. So that's good. Yeah, see? So what do you expect? So these small companies, if Microsoft is coming out and the capital expenditure has increased, what do you think these small companies are going to be? Of course their capital expenditure is going to increase. They think it's just, you just keep buying sites and stuff and data centers and your capital expenditure isn't going to increase. Of course it's going to increase. So they beat earning per share. OpenAI. It's not OpenAI. It is. Okay. What else you got? Meta, I believe. Meta earnings. Same thing on earnings, 6%. It's not bad, 6%. But it depends what happens tomorrow. What happens tomorrow from here? That's another thing. But all of this is set up for pullback. This whole thing is set up for pullback. It doesn't mean it will happen because earnings are good, right? You don't just say, pullback is coming or it's going to happen for no reason. No, you have to use your brain. Projection. Okay, are the earnings altogether good? Are they good? If they are, then you don't expect a pullback. You expect more continuation. But you also say, well, I'm not going to see big returns in the big tech because they're just going sideways now. So I'm just going to go into growth stocks, maybe crypto. If the earnings are bad, well, you have to say, market is going to get sluggish and there's going to be pullbacks. And that's something you'll see. Actually, you're already seeing it. As these big tech report, the market ends up pulling back. So what stocks do I like? I mean, there's a lot of... I hate this stock just because I'm not in it. Even if I was in it, I would have been out a long time ago looking at Look at earning per share, comparing it to PE ratio. It's not the only stock I hate, actually. There's a lot of stocks that I hate. This I hate with passion, just because of what it represents. Palantir. Anyone who owns this stock, I think you have no heart. I think you have no. I don't think you know what this stock does. But at some point, this has to happen. I'll be excited to see that. When? I don't know when. We'll see. You wanna know my favorite stock? You know this stock we stopped hearing about, ARM Holdings. Wow. When was this? We were trading it around here. When this launched over here, we were in it. But this is the thing I don't like about all these AI stocks. Look at the PE ratio. Like, you have to. PE ratio means something. I know some people don't like talking about it. PE ratio comparing it to earning per share. Stupid. Now, of course, when you have to look at statistics and financials to give you a better understanding of what's happening here. There's growth. Boom, boom. Okay. Big jumps from this year to this year. Big jump. 700 million. Float is good. Cash, a lot of cash. That's good. Yeah, it's good, but I mean, like I said, it's expensive. But you wouldn't touch it. I wouldn't touch it now. I would look for a correction or a pullback. Because after a correction or a pullback, it signals to investors everything has, the weak money has left and the speculation has left the stock. That way it makes life easier for you. But Federal Reserve interest rate cuts don't really matter if earnings are weak when markets are expensive. I guess that's something to take from today's video. Don't focus on rate cuts this season, focus on earnings, because as the market is expensive, you need to make sure that the earnings are somewhat justifying the overvaluation. But even if the stocks come out sluggish, it doesn't mean there will be a correction or a pullback. What it simply means is money stops getting interested here. So it goes and shifts towards something else. Maybe it looks at small caps, mid caps, especially if the environment is favorable for them. So that's your medium cap, growth sectors, cryptos, All right. I gotta go have my coffee now. See you guys later. Maybe tomorrow, we'll see.